This conference will now be recorded.
So now we have moved into managerial accounting, and you've got your first introduction. And what you note is that managerial accounting, as opposed to financial accounting, is for the managers and employers and internal users as opposed to external users. Financial accounting is going to have a historical perspective, whereas a managerial accounting is saying we're looking at the future. And so those are some of the key things, because as a manager, we have to plan for the future. Financial accounting is reporting on those plans, what actually happened. We then begin with a look at job order costing, and we will move to other costing systems later. But the one that we're working with now is job order costing. And we said that one of the key things that we have to do is determine how much it costs to produce a product. What is the cost of one item? And we said there's a managerial accounting cycle, which we will get into today. It's based on that same equation, asset equal liabilities plus stockholders' equity. But we said the first thing that you have to do is to be able to determine unit product cost and selling price and the predetermined overhead rate. And I gave you a template and some things to work with. Are there any questions on determination of unit product cost and selling price? Can everyone do that? Okay. After that, we're going to make journal entries. We're going to post them to the ledger. We do have some new accounts: raw materials inventory, work in process inventory, finished goods inventory, manufacturing overhead. We're going to prepare a trial balance, and we're going to prepare the financial statements. We have new statements: cost of goods manufactured. We have to determine how much it costs us to make the item. Cost of goods sold, we have to determine, what is the cost of the items that were sold. And then we, and this is just a basic statement, it's not very difficult. Then we have the income statement, statement of retained earnings, balance sheet, and statement of cash flow, and preparing the closing entries. So we do some of the same things. In making any product, there are three costs: direct materials, direct labor, and manufacturing overhead. Those are the costs of making the item. Then we have the period costs: marketing, administrative, interest expense, which are the general expenses. Those are not product costs. With the product cost, we determine selling price. And then these are the expenses that must be, incurred as we market and sell the item. Have the CEO pay for interest on borrowing and everything. But we gotta, we have to have a firm handle on what is the product cost. And we said that there are three costs: raw materials, labor, and overhead. Raw materials, we know. Direct labor, we know. Manufacturing overhead is everything else. And all of these costs have to be included when we determine a selling price. And we looked at this example where, suppose we were making 100,000 units. The raw materials consisted of 2 units at 15. Direct labor, 3 hours at 10. See, we can calculate that directly, but then we have the $600,000 in overhead. And the question is, how do we get that to a unit basis for unit cost? So we said that direct materials 2 at 15, 30. Labor, 3 hours of labor, 10, 30. And then we said that if the overhead was 600,000, and we were making 100,000 units. In actuality, 600,000 spread over 100,000 units, that's going to be $6. But because we've got to make journal entries and we got to allocate it based on what's happening, we may not make 100,000 units. We use labor hours and a POR to get that allocation of 6. So once we have a cost, if that selling price multiple is 3, then the selling price is 198. Why is the selling price multiple 3 as opposed to 1? Well, you got to pay the period cost. You got to pay these costs and make a profit to pay dividends to the owners. And so your selling price multiple cannot be 1 because you would simply cover the manufacturing costs. So it has to be higher than 1, and it has to cover the administrative and selling expenses, dividends, retaining a profit. And we talked about manufacturing overhead. These are the indirect costs, indirect materials, indirect labor, things that we cannot tie directly to the product, but they've got to be included in the cost. Any questions so far? Then I gave you this template, how to get a POR, how to get unit manufacturing costs. And we worked on these problems. You worked on 2 homework ones because I didn't want you to have to start the problem wrong. Any questions to this point? No questions? Okay. Let's move to step 2, which is making managerial accounting journal entries. And we always have to make journal entries. And so to simplify it somewhat and not just have you making journal entries, I break the journal entry down into stages. Stage 1, acquisition of raw materials. Stage 2, transfer of the cost to work in process. Stage 3, transfer of cost of completed goods from work in process to finished goods. Stage 4, sale of the finished goods. Stage 5, payment of selling and administrative expenses and dividends. Stage 5, that's what we did in Principles 1. So now, with what we did in Principles 1 for Stage 5, we have to layer on top of that stages 1, 2, 3, and 4. Buying the raw materials, transferring the cost to production, transferring completed items to finished goods, and then selling the items. We did that. But when we sold something, we already had the cost determined, whereas we have to determine the cost now. So, in picture format, we buy raw materials. Then we make the item. That is, we transform the raw materials into the finished product. Once the finished product is made, we put it in boxes so we can sell it. And as usual, at the end of the day, selling the product is, it's the main thing we in business to do, not just to make it, but to sell it. And then we pay selling and administrative expenses plus dividends, and the managers make the plans in terms of how much we're going to make, how much is it going to cost, what's our profit going to be. So those determinations are made, and this is, where the business school operates a lot, but the business school is always also back here because the management majors have to oversee the process of making the items. So selling, that's marketing, but all of these things happening here, management majors supervise all of this. Management majors supervise all of it. So do we think we have this all down now? Here's our manufacturing chart of accounts. Basically the same, except notice we got raw materials, work in process, and finished goods inventory. And we have cost of goods sold, and we have manufacturing overhead. Okay, so these are costs we add in, but as you can see, most of the items are already here, and you were supposed to, learn those in financial accounting. In preparing the financial statements, the first statement we prepare is a cost of goods manufactured statement. That's a new statement. Then a cost of goods sold statement. Very simple, beginning inventory of cost of goods plus what we manufactured, less the ending gives us cost of goods sold. Little adjustment here for over and unapplied overhead, and we'll talk about that for our adjusted cost of goods sold. Then the income statement, same as usual. And, because we do the balance sheet and things like that too, we won't focus as much on it. And then we're going to look at this problem next time. And I have in Blackboard your assignment for each team in terms of what you're going to do on this problem. There's a team that's responsible for the unit costing worksheet. There's a team that's responsible for stage 1, stage 2, stage 3, stage 4, stage 5. Then there are teams that are responsible for preparation of the statement. So in these stages, we're making journal entries. So let's just see. Okay, so here you see your assignments that you have to work on each team, who the participants, and the grades that you're going to get. Okay? Okay. How do we simplify all of this that we talked about? How can we simplify this a little bit so that everybody can work on what they're supposed to work on? And okay, so I put up here a blank spreadsheet. Which we will try to work with to look at what we're doing, this blank spreadsheet. So we've covered the first step, determining unit cost, selling price, and that's estimated unit cost. Sometimes that selling price is fixed. So once you come up with a cost, you come up with a selling price and you publish that, that's it. Okay. Then the POR. So why don't we begin by looking at stage one? And see if we can determine what happened in stage one. And in stage one, we said that was where we did what? What did we say we did in stage one?
Figure out the cost of producing the product.
No, that's step one. We on
Okay.
step two. Let me go back. Let me make sure where we are. Let's see. Okay. See, we had step one, determination of unit cost. That's step one. Step two is journalizing entries. And so there are a bunch of 12 to 15 entries that we have to make. And some of these entries are new. And so rather than just to tell you to say make these entries, I broke them up. Into stages. So we're going to be making about 15 or so entries, but there's so many entries per stage. So we have stage one, which is the acquisition of the raw materials. Let's see if we can get back here. So let's just see if we can work from a blank sheet here to look at the journal entries that we're going to make. Stage one is the stage for the acquisition of raw materials. So this is stage one, where we acquire the raw materials. And so we've got to make some journal entries. And the journal entries are, we're making my book. We're going to debit raw materials. And what are we going to credit? We're going to credit accounts payable. And we make this entry for every raw material. So in stage one, we simply debit raw materials, credit accounts payable. And we make that entry for however many raw materials it is. So if we have the book or raw materials, ink, and I'll just credit accounts payable. So those are the journal entries for stage one. That's the first stage. That's all you have to do, those journal entries. Now, it's going to tell you to, you have to calculate the amounts, but the journal entry always looks like this. Any questions? Let's see if we can go to stage two. What happens in stage two? We're going to transfer items into production. And there are always at least 3 entries we make. We're going to debit work in process.
She's like, holy shit, where have you been? I was like, man, I was getting things shoved up my nose and into my brain. Just like, come to school again.
I need you to mute.
Good to hear you read. I'm just like,
Okay. So we're in stage two now, and we're going to debit work in process, and we're going to credit raw materials. And we will make this entry for raw material as we transfer it into stage two, into making the item. So we're going to debit work in process and credit raw materials. So if we had 2 raw materials, ink and paper, we will make this entry twice. Okay. So that's the first entry that we made to transfer items in the work in process, transferring the raw materials. What's the second thing we're going to transfer in?
Another raw material?
We already got those. We would just make, those entries. So we're going to debit work in process, and we're going to credit cash. Okay. Here we, the first transfer is the raw materials. The raw materials. The second transfer is going to be for the labor. Okay. So the first transfer relates to transferring in all of the raw materials needed to make the item. Then the second transfer is the paying the workers, that's the labor. Then our third transfer, where we're going to debit work in process again. And we're going to credit what? What are the three components of making an item? So that next transfer is going to be a debit to work in process and credit manufacturing overhead. And this is the estimated overhead, okay? So notice I'm putting estimated overhead. When I make my book, I've got to have it ready by September, or August, really. So I've got to have a selling price that reflects everything. All of my costs, a lot of my costs won't come in until the end of the year. And therefore, I have to estimate what the overhead is going to be and put it in there. So in stage 2, there are 3 journal entries. Journal entry, I'll just put Roman numeral 1 for the working process. Journal entry, however many it is. Roman numeral 2 for the labor. Roman numeral 3 for the overhead. So these entries are always going to be made in stage 2. And if you would notice in stage 2, we debited what? Work in process each time. We debited what? Work in process each time. So in stage 1, we acquired the raw materials. In stage 2, we transferred them to the production flow to be made. Now we should be ready for stage 3. What's going to happen in stage 3? If anything.
We're going to transfer the cost of completed goods.
That's correct. We're going to transfer, when we complete the items, transfer costs of completed items just put FG for finished goods. Okay. For each item we make, and if we just make it one, then the journal entry is simply going to be a debit to finished goods. And what we're going to credit?
Raw materials.
No.
Tried it.
We're going to transfer work in process. Notice our flow. Stage 1, we buy the raw material. Stage 2, we make the good by transferring in raw materials, hiring workers to do the work, and estimating the overhead. When we finish making the item, then we transfer it from work in process to finished goods. So you notice, that's why I set up the spreadsheet this way, so we can look at it going across from buying the items, making the items, transfer completed items to finished goods. Any questions? So everybody understands everything. Yes. So, but we're showing you, we're just saying, okay, stage 1, it happened. These are the journal entries. Stage 2, these are the journal entries. Stage 3, these are the journal entries. So your next study problem, these will be the journal entries that you'll be seeing. Then we have stage 4. What happens in stage 4?
We're gonna sell the finished goods and transfer a cost from the finished goods to the cost of goods sold. That's a lot.
So sale of finished goods. And that's why we made them to sell them. So we did all of this, bought the raw materials, transferred them to work in process to make the item. Then we made it. Now we selling it. That's when we're really happy, when we are selling the item. Okay. Let's look at our journal entries when we sell the item. We're going to debit cash or what else? What else we're going to debit? Accounts receivable. We're going to credit sales. And you all should be familiar with that entry, right? But whenever we sell something, we also have to debit cost of goods. So and credit what? From your old inventory days in Principles 1. What are we going to credit here? Finished goods inventory. Okay. So 3 inventories. Raw materials inventory, where we buy the raw materials. Work in process inventory. Here's the raw materials inventory over here. Then the work in process, where we work on them. Then the finished goods when they're completed. So we now have 3 inventories. Okay. Now, by the end of the year, we know what the actual manufacturing overhead was. We estimated the manufacturing overhead here. And so we have to make an entry once we know what the actual cost is to make the items. We're going to make an entry debiting costs of goods sold and crediting manufacturing overhead. If we have a situation where for the manufacturing overhead account, So we got the account. The account has a debit side where the actual costs are, and it has a credit side where we estimated the cost. So if we estimated that the overhead costs were, say, 250, let's say we estimated the cost was $290,000. Okay, that's what's in this journal entry. When the actual costs come in, they're $300,000. Okay, so we're simply closing out this account. We had $290 of the costs in there. We need to put $10,000 more in there, so we're gonna debit cost of goods sold, put the additional $10,000 in because we didn't estimate enough. We didn't apply enough, and we're gonna credit cost of goods sold. Let me just say.
Professor?
Mm-hmm.
So when we do the last one, cost of goods sold and manufacturing, we have to also do the manufacturing overhead journal entry to like with it together.
Yeah, when we in the stage
Okay.
4 is we do it.
And then for the first two, where you did cash and then sales, cost of goods sold, finished inventory, those have to go together as well. Like they come together.
Correct.
Okay, so you can't have one without the other.
Yep.
Okay.
Now, if we had a situation where the actual overhead was still 300, let's just say, but we estimated the overhead to be 320, then we would estimate it too much in this entry. And so now we got to reverse it. So we would debit manufacturing overhead. And we would credit cost of goods sold. For the 20,000. So those are the entries we made. Now, you know, we do have a stage 5 where we pay selling and administrative expenses, pay dividends, etc. But those were the entries that we made in Principles 1 that you worked on in your first study problem. And turned it in such good fashion and everything. Okay. So next time as we begin, you know, when we work, we now see what? Okay, if I can look here and I know my accounts now. So I know, you know, I know a stage instead of a type, it's a stage. And we know what we debit and what we credit. Are there any questions?
Is it only one entry for stage 3?
Say that again.
It's only one entry for stage 3?
Only one entry. Now, you would have more than one entry if you made more than one item. So we don't make more than one item until the next chapter. But as long as you're making just one item, just one entry.
Okay.
So here, you're going to have as many entries as the amount of raw materials you have. When we make those transfers, much raw materials is transferred in, you make those entries, but only one entry for labor and only one entry to estimate the overhead. So we'll say this as job order costing. So we'll save this as a job order costing flow chart. So a lot of times you're trying to learn something, you lay it out like this, so you have it in a way you can understand it and digest it better. So going back to the primer, I just put in a flow chart fashion, since you all are such visual learners. What's here? We buy the raw materials, debit raw materials, credit accounts payable. When we begin to make the item, transfer the items in, we debit work in process and credit raw materials inventory, work in process cash, work in process overhead, as we bring in the cost to make the items. Once the items are made, we transfer in the finished goods. Then the happy time is when we sell what we've made. And we said, when you sell something, you got that, and you got the cost of what you sold. And then we talk about that overhead. You estimate the overhead. Once you find out what that overhead actually is, you then have to make the account zero. So you're going to make an entry, debiting one and crediting other. So the overhead account moves to zero. Sometimes you have depreciation, so that should be pretty clear. Okay. Here are these financial statements. And we'll get through the journal entries first, but notice, the big key statement. The beginning balances, and we won't initially have beginning balances, but you could have beginning balances. Your purchases, and then so your transfer of raw materials, work in process, labor overhead, total. Let me take that back. This is just the information. Okay, so this is the balances that we have. So here are the statements here. And a cost of goods manufacturer statement is going to have those same three items: raw materials, labor, overhead. So it's always raw materials, labor, and overhead, but we have to see what's happening in a manufactured basis. Cost of goods sold is a simple statement. Beginning inventory plus the cost of goods manufactured, you bring that down, less ending finished goods inventory, that over or unapplied overhead to give you adjusted cost of goods sold. Then the income statement. Everybody knows how to do income statement. Sales, less cost of goods sold. Gross margin, less selling and operating expenses. Net income. So here is your sample problem. And you know what you're supposed to be doing on the sample problem, correct? You have your assignment. Somebody has this. Somebody has stage 1, 2, 3, 4, 5. Then someone has each of the statements. Okay? Here's a template here for cost of goods manufactured. Template for cost of goods sold. Template for the income statement. Here's a sample worked out problem that we always have. So you see in the sample problem, you see everything already worked out. It's it's a more comprehensive problem, and that's why we have it. Notice I got the balance sheet done. Now, we have some multiple choice questions here. We have 13 multiple choice questions. So next time, team 1, multiple choice questions 1 and 2. Team 2, multiple choice questions 3 and 4. Team 3, multiple choice questions 5 and 6. Team 4, multiple choice questions 7 and 8. Let me take this back. Okay, for 1 and 2, team 1. 3 and 4, team 2. 5 and 6, team 3. Then I want every team to do 7. So every team would do 7, 8, 9, and 10. As you're looking at what your midterm will begin to look like. Then team 4, 11, 5, 12, 6, 13. Okay? But it's very important for every team to look at this, cut the data, and then answer these questions for 8, 9, 10 that relate to that. Where you have to come up with cost of goods manufactured, unadjusted cost of goods sold, adjusted cost of goods sold, and then the net income. Okay? Are there any questions? So no questions?
So for due on Thursday, you want us to do these multiple choice questions, and then the other thing that you posted?
Correct. So the multiple choice question we're going to do first.
Okay, but don't we need like we can't do the statements without having the entry. So don't we how do we do our part for the other assignment? How do we do our part without the other parts?
Well, you got your group me account, don't you?
Used to work not only in groups, in our regular groups, but all together as like a class?
That's a class thing now. So this problem is a class problem that you all are working together as a class.
Okay, and it's due on Thursday?
multiple choice.
Okay, so what do you want us to do if the team one, because team one would have to do their part for team two to do their part and so on. So what if
What?
a team, like if team one never does their part, then where do we go from there?
I won't be taking excuses on Thursday.
Gotcha.
You see the points. So I'll expect each team to be able to proceed and work on their part of the problem and go through and explain it. But people want to make A's, you know, you might want to just go and work the whole problem anyway. Because you eventually got to work the whole problem. So we just cut it up into pieces so we could look at it. But I didn't want to cut it up and work it myself since I know how to work it. And the object is for you all to work it. Okay, so what we're going to do, we're going to start on part one now. And in actuality, each team needs to do part one, each individual. So I assigned this to a team, but since this is critical and important, every team needs to do this. You know, a lot of times I might give you a team quiz on this, you know, looking just like this. And when you have that team quiz, so the team works on it and submit parts, but the smart thing to do is to have each member of the team work this out, make sure it's right, and then share it. And you share it, then you go on. Got it? So I gave this to one team. I'm now giving it to every team. That's a better way to do it. So given that I've given this to every team did now work on this. So begin working. And the way you begin work is everybody will now work it individually. And then teams will get together and decide what the right numbers are. And then team leaders will get together with other team leaders to make sure there's a uniform number that's being used for estimated unit cost, estimated selling price, predetermined overhead. So everybody get to work. Let me see how this looks.
Professor Boyd, are we supposed to be doing this right now as a group, or are we supposed to?
Right now, because I'm gonna put it. I'm gonna make
Okay.
Where is it at?
What?
Okay, call me when you get done with class, JP.
All right.
Where is that? Did you send it to us?
I'm getting ready to. You can't see it. You're supposed to have a primer.
Okay, so first you want us to do the job order costing unit worksheet, right? Like that whole worksheet first.
Correct.
Get those three numbers, okay.
Okay, it's in assignments now as an attendance quiz.
I have another question.
Okay.
Okay, so on the last ones we did, in the last job order costing unit worksheets that we've done, you didn't have a total estimate overhead and a manufacturing overhead. So which one do you want us to use for part 3?
Same thing.
The manufacturing overhead?
Yeah.
Okay.